What's up, YouTube? Investor channel here. Going to walk you through just the financial parts and a little bit of Snapchat's or Snap Inc.'s S1 filing. So what this is before a company goes public, they file what's known as an S1, and you'll notice here they originally filed one. This is Snap Incorporated, filed one on February 2nd, but then these get revised as the size of the offering, the price of the offering, and all those things start getting sorted out. Also, you have different regulatory requirements that are put in these and revisions. And so typically you want to go to the most recent one. And so that's what this is. It looks a lot like a 10K or 10Q. Tends to read more like an annual report. Some interesting things right on the first page is typically the number of shares that they're going to issue. So this is important to you as an investor, since if you are going to buy this or sell it short or whatever, this is the kind of numbers of shares we're dealing with. The company itself is selling 145 million of these Class A shares. That means, and they had an offer price 14 to 16. I just saw on the news that it actually priced at $17 a share. That means $17 times this 145 is what's going to go to the company, minus fees and things like that. There is a stockholder or a shareholder, so an insider, a guy that invested in this company a few years ago or a while back, is offering up the other 55 million shares. So that money is going to go to his bank account after paying some taxes. Probably he's probably going to hope Donald Trump lowers the corporate the personal income taxes. He's going to owe a lot of money on that. But essentially 200 million shares at $17 a share. You can times 17 times this number and you get a rough valuation at which Snapchat is going public. But really what I wanted to do, in these S1s or 10Ks, there's a lot of legal mumbo jumbo. There's a lot of this stuff in there. I'm not saying that none of this stuff's important, but really what the purpose of this video, I want to run you through the financials and just show you how they're a little bit different than Facebook, who it's often compared to it. And I could even bring up Twitter or Google or any of these kind of advertising companies. Snapchat's cost of revenue line for me really stood out. And so I wanted to show that. So we've got the consolidated statements of operation. This is a really kind of quick look. I'll show you in comparison. Here's Facebook. And so Facebook, this is actually on a monthly basis or a 3-month quarterly basis. But I'll get back to that in a minute. So this is Snapchat's yearly revenue. So this is for the full year. This is for 2015. This column's for 2016. These figures are in thousands, so we add essentially 3 more zeros here, and we get to where these figures really are. So this is 58. They had a lot of revenue here. 58 million. That's a lot of revenue. Now, the cost of revenue is what I really wanted to point out to you, because notice they spent $182 million to make $58 million. That was back in 2015. That's quite a stark contrast to if you look at Facebook. Here's Facebook. This is just for a 3-month basis. These figures are in millions. So this is $7 billion worth of revenue. Notice the cost of revenue, and I'm going to say only, was $1 billion. Research and development, marketing, sales, general administration. These are all costs that Snapchat realizes too. But I just thought, wow, this cost of revenue line was like triple what their revenue was. Now, in 2016, the economies of scale and maybe some more efficient, cost controls maybe from Snap, we got from 400 million in revenue, and the cost of that revenue was 451 million. So still spending well more than what the actual revenue line. Now, we haven't even gotten to research and development, sales and marketing, and general administration to get to a total cost of revenue. So we notice right here in 2015, Snapchat spent 440 million to make 58 million. And this past year in 2016, they spent nearly $1 billion to make 400 million. And again, I'll contrast that into Facebook, who spent 3.8 billion in a quarter and made 7 billion. Here it is again, 3 billion. They made 4.5 billion. On a 9-month basis, they spent about 11 billion and made 18 billion. So clearly Facebook, obviously more mature company. Not really trying to compare the two. I'm just showing you when I went through this S1 and after, being familiar with Facebook's business model, I found out, man, Snapchat's business model is a lot different. Why is this cost of revenue so much higher in relation to their revenue? When we look at something like Facebook, aren't they doing the same thing? So what I want to do with these documents, and typically what's really helpful, is if you do a find and replace. And so if you hit on my Mac, it's Command F. On a Mac or on a Microsoft computer, it's going to be like Control F, and it's going to bring up something like this. And I typed in cost of revenue. And I did a search. And so here's it on the what I'm looking for is what is in this cost of revenue? What's contained in here? Here they're talking about cost of revenue. So I'm basically doing a document search to where whenever they reference this and we get back to, notice here we are back to the financial data. And here we go. Cost of revenue consists primarily of payments to third-party infrastructure partners for hosting our products. And if you dig further into this S1 as I have, it's really Google who is providing a lot of the cloud computing software and infrastructure related to hosting all the snaps and the video and the augmented reality AR that embeds itself over like the bit emojis and all that stuff that's going on Snapchat. Google's computer and infrastructure is kind of powering a lot of that on the back end, and clearly by looking at the financial data, it's a significant amount of computing power, because this cost of revenue, if we think about it, Facebook's got more users, but they're not running any or all of that augmented reality stuff. Maybe they own some of their own servers. I have no idea. But Facebook's cost of revenue, far less. However, if we keep reading in this S1, if we go back down to where it says, there's hosting cost. This is bandwidth, computing, and storage costs. And obviously, I think Snapchat is more reliant on this stuff. They're more innovative on top, like the AR and the little rainbow coming out of your mouth type stuff. That takes computing power. That takes bandwidth, and storing that it costs money. So they're far more intensive on the cost side there, which I found interesting. Now, here's the last line. Cost of revenue also includes revenue share payments to our content providers, content creation costs, and this is personnel costs, so employees and stuff like that. They also have advertisement measurement service, which is like analytics to measure the effectiveness of their ads. Last thing, which I think is really important to understand this business, cost of revenue includes inventory costs for spectacles and facilities and other supporting overhead costs for this product. This is what makes Snapchat far different from Facebook, which doesn't have a product you can buy. Now, the spectacles are these sunglasses that you can buy from Snapchat's own website, and they work exclusively with the product itself, and they sell them on their website, or also the little vending machines, if you can find one, for $129. Now, what I'd like to see in the future Snapchat do is actually start to break this out differently. They give us this consolidated statements of operation data. What I'd like to see is, okay, on this cost of revenue line, how much is Snapchat making on these sunglasses? I think we all know that Snapchat is probably never going to reach the scale of Facebook, which is a far broader use case for social media. However, if Snapchat is able to, sell these sunglasses for $129 and make money on them, their user base could be a little bit smaller, but if 10%, 20, 30% of those users are buying a device like this, it could change the valuation metrics or change the way you'd value something like Snapchat. Obviously, Facebook could get into this business as well. They could make a pair of sunglasses, a watch, a phone. They've even dabbled in those things, I believe, as well. But Snapchat could create a camera device, could create a wearable. There's a lot of different things this company could do, and I can imagine they'll be innovating on that stuff with the IPO funds that you can get. However, what I wanted to show you was here's the consolidated statements of kind of a financial data here. This cost of revenue line should stand out. If you're looking at this and you're figuring out ways to interpret this, this cost of revenue line should have really stood out. It should say, wow, look how much they spend. They spent all this money, the cost to just get this revenue. And it's all related to the hosting and the server cost of kind of serving the snaps and the photos and the videos. But in the future, now I don't think this is a huge part of Snapchat's business yet, these sunglasses, but if this does, what I'd really like to see is them break this out separately. I'm sure as they're a public company, again, this is an S1 document. Once we start seeing 10Qs and 10Ks, we might see far greater detail on what I'd like to see is inventory levels of these. I'd love to see the margin. So they're selling this for $129. What do they make it for? You know, if they're making these for $12 or $15 and they're able to sell it direct to the consumer for $129, hey, only a small percentage of Snapchat's users need to buy these for them to generate significant profits. Now, speaking of profits, Snapchat hasn't sniffed a profit, at least in the 2 years that they've reported here. So let's go over the most recent year. We have $404 million in revenue. Again, the cost of that revenue, which we know is server cost, primarily to Google. And it's also, I would assume just a small portion of that is inventory, buying these, manufacturing these sunglasses. So that's included in cost of revenue, and it costs in excess of $450 million. So they're already losing money right there. Now they have research and development coming in at $183 million. Notice that's up $100 million over the year prior. So if that keeps trending up, you better hope this keeps trending up as well. Sales and marketing, look, up another $100 million. So sales and marketing for a company like Snapchat and for Facebook, they're basically selling the idea of advertising on Snap to other advertisers. So people at Snap will call marketers at Chipotle and the New York Times or Amazon or any of these companies that want to market to the kind of audience that Snapchat has on their platform. They're calling them and trying to get them to advertise. General administrative, notice this was at 148 and it's gone to 165. I would expect this to climb as they become public. It's likely going to get more expensive to be a general administration. This is like legal fees, all kinds of stuff. Again, you could do a find and replace on this, and they'll give you a general idea on what this is. But again, it's a line that all companies have. They all tend to break it out like this. I just thought, man, I mean, notice the cost of revenue for Facebook in relation to other costs that they might have, and certainly the revenue line is in check. Obviously, this is a mature business, a business at scale. And Snapchat is, pre-IPO, at least these financials are. But I just wanted to show you, man, this should really stand out to you, this cost of revenue. If this doesn't scale and start scaling in the right direction, it could, it already I'm noticing that there is some economy of scale here. It's just the rest of these lines I'm expecting to tick up as well. And if this revenue starts stalling out or doesn't keep growing at this kind of clip, definitely you might see some pressure in the stock price. As we work our way down, notice we had total loss from operations was, this is the cost, total cost here, minus the revenue we brought in, equals our loss from operations, which for the last 2016 was over $500 million. So they lost over $500 million bucks. We have some other adjustments here related to some interest income. This is likely Snapchat having money in the bank and earning a little bit of interest on that money. And interest expense, likely Again, I don't know this for a fact, but likely related to the manufacturing of this. They probably had a line of credit and things like that, which is typical in the manufacturing business. And it gets us down to our total loss before income taxes, which Snapchat did not. This is a credit, so they lost a little bit less money here. We see a $500 million loss. Earnings per share, obviously a loss per share, and that's actually gotten wider over the previous year. Then we get down to stuff like adjusted EBITDA and free cash flow. Don't necessarily need to get into in this case because the company lost $500 million. Of course, they're going to have negative cash flow. And that might be in part why they're going public here, because they had negative cash flow of $677 million last year. So if they do that again, chances are they're going to be beating on the doors of investors, so they're hitting the IPO market. So just wanted to show that to you. Just wanted to, compare and contrast a little bit between where Snap is now at the IPO process, and then kind of their, who they're compared to often is this Facebook. And what just stood out to me is the cost of revenue line on Snapchat is just so much higher compared to their revenue, and just shows me there's a lot more computing power, a lot more cost associated with that computing power that Snapchat has to deal with. They're also a device maker, so there's cost to develop these, manufacture these, design these, have inventory levels of these, market these, etc., that Facebook doesn't have to deal with. So at least right now. Would I be a buyer of Snapchat's IPO? If I could get it at the IPO price of 17 and I could sell at any time, absolutely I would. I think you're going to see an opening day pop on something like this. However, if I have to hold this stock for any period of time, it's just not my thing. With revenue and losses like this, the market's going to want profits, going to want to see a path to profit, see path to Profitville, since you can just go invest in Facebook and invest in a company that's churning out a few $1 billion in net income to the bottom line every quarter, every 3 months. So this is $2.3 billion net income right here for 3 months. And Snapchat lost $500 million in a whole year. So, you tell me what you want to invest in. So this thing better keep showing the rapid growth. Otherwise, holding this stock is going to be toxic waste. Certainly going to be a stock I want to watch. I want to watch these financials and see how it goes. Definitely this device, to me, is where they're going to make, I don't think they're going to differentiate themselves much on the advertising space from Facebook or Google or any of those other marketing platforms that you have today, Twitter. But where they could separate themselves is with these proprietary products that the consumers and users of Snapchat really like. And so I think that's where their secret sauce could lie in the future. But we'll see. Thanks for tuning in. Check out my other videos. I just did a video we went through Facebook's entire 10K. I've got Under Armour up. I've done one on Coca-Cola. If you have any questions, leave them in the comments or send me a message. Thanks for tuning in. Hit subscribe if you can. Thank you.